Hi, everybody, and welcome back to Chapter 17, Activity-Based Costing and Analysis. In this chapter, we're going to look at the kinds of activities that cause overhead costs to be incurred. We're going to look at then how we allocate selling, general, and administrative expenses, and how we're going to use that to assess profitability. And there are several ways that we might allocate overhead. The first one is the plant-wide overhead rate, and then that's one rate. And then a little more sophisticated is the departmental overhead rate method, where we have different allocation methodologies for each department. And then finally, the activity-based costing, and we'll see how that works, and that's the most sophisticated of those. And also we can use activity-based costing to allocate not only for manufacturing companies, but for service companies as well. Here is a nice little chart that shows us how this works in big picture format. If you can see this yellow cost of goods sold over here, here we bring in our direct materials. Now, materials can come in direct form like this, and it goes right into work in process, sometimes called goods in process, as it says here. But also we have some indirect materials that we use. Usually, in my experience, those have been things like lubricants or maybe glue, little tiny things that we could probably allocate to each individual unit, but we don't want to be bothered. So we bring the whole thing into the overhead pool as indirect materials. And labor is similar. We have direct labor that's used directly in making the product, but also we have indirect labor such as maintenance and custodial care and some things like that that we can't attribute specifically to a product, but is definitely a cost of operating the factory. So what we do here is allocate that factory overhead, and this is what this chapter is going to be about. Once we have our work in process inventory or goods in process, we're going to do one of two things to it. We're either going to sell it, and if we sell it, it's going to be in our cost of goods sold. But if we keep it, it'll stay in inventory as finished goods. Okay, so as we complete the work in process inventory, the finished goods then are made, and two things happen to it. We either keep it or we sell it. Okay, and if we sell it and we're a manufacturing firm, we're going to make sure we adhere to the expense recognition principle. And so we would typically debit accounts receivable and credit sales for the sales part of that. But for the cost side of that, we'll debit cost of goods sold, which is on the income statement as sales is, and credit finished goods inventory to show that we're reducing finished goods inventory as it goes out the door to our customer. Okay, so as we look at a summary of these overhead cost methods, we have the plant-wide rate. That's one rate. It's a volume-based measure, and it uses like direct labor hours, direct labor dollars, machine hours as the allocation method. Those are volume-based. The departmental rates, we're going to have two or more rates. It's also going to be based on a volume-based measure like direct labor hours or machine hours. But activity-based costing is different. We have many rates, and those activities drive the costs, like the number of batches that the product is produced. We'll get into that a little bit more. I know that's a little unfamiliar right now. Okay, let's take a look at how we do that for the plant overhead rate method. This is pretty simple. It uses one overhead rate here to allocate those overhead costs. And we call the cost objects, that's basically the units that we're making out in the plant. And our allocation base can be a number of logical things. Normally we use direct labor hours or even machine hours. Could be labor dollars as well, but normally the direct labor hours is what we use. So we're going to base that rate on a budget. It's going to be an estimate. So it's the same rate that we use to assign overhead costs to all the products, no matter what kind of products they are. So here's our overhead costs budgeted, and we calculate the plant-wide overhead rate based on our budgeted overhead and our overhead overhead rate. And then our cost objects are going to be our product 1 and product 2 in this example. So here's our budgeted overhead cost, 4.8 million. Here's our budgeted direct labor hours, 100,000 hours. We divide 100,000 into 4.8 million, and we get a rate. So here's our actual usage now. We expect, or we are actually making 5,000 units of the standard go-kart and 1,000 units of the custom go-kart. And they use different direct labor hours as shown. And the total then is going to be the number of units times the direct labor hours per unit. And that totals the 100,000, if you can see that through my picture. So we calculate the plant-wide overhead rate, predetermined overhead rate, it's sometimes called, and very simple. We get $48 per direct labor hour. And then we're going to then that overhead is going to be allocated based on that plant-wide overhead, should say, rate times the direct labor hours actually used. So in this case, we use $48, and in custom we use $48. And so how we're going to allocate this overhead, it's going to be $720 per unit for standard and $1,200 per unit for the custom. So our overhead cost for CartCo here is 4.8 million. Our rate is $48 per direct labor hour. So we just calculated those at $720 and $1,200. And now we're going to combine that with our direct materials, direct labor, and now the overhead that we just calculated. And that gives us our product cost per unit using the plant-wide rate method. All right, let's step it up in sophistication a little and look at the departmental overhead rate method. Now, in this case, we have our overhead cost. That doesn't change. That's going to be 4.8 million, but we're going to divide it between the two departments. And we're going to establish a rate for Department A and Department B. And as these green and magenta, I guess, arrows show, we're going to allocate those costs to products, cost objects, as it would say. Sometimes, by the way, they call these overhead costs divided into the departments here as cost pools. All right, so 4.8 million does not change, but we are going to allocate it between machining and assembly. So here we have the same number of units, standard and custom, but now we have our machining department and the assembly department. So now we're going to allocate the machining department's overhead based on $60 per machine hour. We get that by taking the 4.2 million divided by 70,000 estimated machine hours here. And so we're going to multiply that through, and we get total number of hours in the machining department, which we show here at 70,000. And we do the same thing with the remaining 600,000 in the assembly department. We're going to allocate that based on direct labor hours, which is unchanged from the plant-wide rate. So that comes out $6 per direct labor hour. So now we're going to take those numbers and multiply them through. Here's $60 per machine hour times the 10 machine hours per unit, and that gives me $600 of allocated overhead for the standard go-kart. And then same thing for assembly, but we use that $6 per direct labor hour. And that gives us our allocated overhead for both the standard go-kart and the custom go-kart here. And so we combine those with the direct materials, which hasn't changed for either of the products, but now our overhead is $690 and $13.50. Now our product cost per unit is different than we calculated with the single plant-wide overhead rate. But both methods, the plant-wide rate and the departmental overhead rate, result in slightly different product costs per unit. And here they are. The overhead cost per unit and the departmental rate methods. So slightly different. Now, if we look at these, it's readily available information that it's easy to apply either the plant-wide or departmental overhead rate. Easy to implement, consistent and compliant with generally accepted accounting principles, and we can use that for external reporting. And to be honest with you, almost always I've used these methods. The weakness is, though, that overhead cost is often too complex to be explained by factors like direct labor hours or machine hours. In my last job, which was a Fortune 500 company, we had 200 different products that we manufactured. Okay, so the plant-wide overhead rate method, the overhead costs change with the allocation base, of course, and all products use overhead in the same proportion. Those are our assumptions. We know that that's not quite right. But here, different products are similar in volume, complexity, and batch size, and we know that that isn't necessarily true. Departmental overhead costs are proportional to the department's allocation base. And that's a little better than plant-wide overhead rate, but not necessarily the same. So what that means is it worth the trouble to calculate activity-based costing, which we'll see here in a minute? As we step up in sophistication, we find that it's going to require a whole lot more work. Okay, that looks like a good place for us to stop this video. And when we return, we'll take a look at allocating overhead cost using activity-based costing here. And when we use activity-based costing, I think you'll see that that's far more sophisticated and far more exact. But the question would remain, is it worth it to do activity-based costing? And activity-based costing, in the example that we'll see, it will be clearly worth it. But that's not always the case in the real world. Anyway, when we come back, we'll look at that. So bye for now.